Back then it was about $100+ per Bitcoin. Today it's 9,000. Is it still rat poison?
Well, probably rat poison squared.
Welcome to today's video. My name is Julian. On my channel, it's all about talking about making you crypto fit, meaning talking about blockchain, decentralization, cryptocurrencies, a little bit of entrepreneurship and mindset. Today, I want to address one of the most famous investors in the world, Warren Buffett. He has been a personal hero of mine. I've been listening him to a lot of things. I completely agree with a lot of the investing advice that he gives, but what about him calling Bitcoin rat poison squared? I kind of want to go through some of the criticism that he has, some ideas that he's discussing, and I'm going to be kind of stating, do I agree with him, maybe partially, or not? Before we go into this video, do me a huge favor. Let me know in the comments below if you think Warren Buffett is right in calling Bitcoin rat poison or wrong. Let me know, because this is always interesting to hear this before I give you my opinion. So, is he right or wrong? Let's go into the next clip and let's see what he says about the entire scenario there.
And when you buy non-productive assets, all you're counting on is whether the next person is going to pay you more because they're even more excited about another next person coming along. But the asset itself is creating nothing. One of the interesting things, for example, is gold. If you go back to the time of Christ and you look at how many hours of labor you had to give up in order to buy an ounce of gold, and you take it forward to now, you'll find the compound rate maybe 1/10 or 0.2%. And then you have to insure it during that time and make sure somebody doesn't steal it from you and everything. But it doesn't produce anything.
So what we hear there is actually an approach that Buffett has in a lot of things. And that is, he always looks at the cash flow something produces. And that is one of the reasons why he doesn't like gold, and obviously also why he doesn't like Bitcoin. And he kind of explains this very proper. He says, look, it's very difficult. If something doesn't produce cash, it doesn't throw off anything, all I'm doing is I'm hoping, I'm speculating that someone else pays more for what I paid for it. And so he's obviously partially right in this, because at the end, that puts a lot of speculation on this asset. And this might also be the reason why he doesn't invest in it, because he prefers to put the bulk of his money, or most of the money, into things that he can calculate, that he can predict based on some cash flow that they're producing right now. And it's a very interesting approach. And it's also actually the reason why I don't recommend putting more than maybe 5% of your money into gold, maybe also 5 to 10% into cryptocurrencies, because it is highly speculative. Because you can't predict where this is going to go, because you just always have to hope that someone else pays more to it. So let's go into the next clip and see what he says there.
And I got to hope next time you get more excited after I bought it from you, and then maybe I'll get more excited and buy it from you. And actually, we could sit in the house by ourselves, and we could keep running up the price between the two of us. But at the end of the time, there's one Bitcoin sitting there, and now we got to find somebody else, and they come to an end. I mean, those.
That's a greater fool theory. That's what you're saying.
Well, yeah, it's buying something because you expect the pool of people who want to buy it because they want to sell it to somebody else will grow. And
so here, he actually goes a step further and calls these people fools. Now, I wouldn't go this route, and I wouldn't say that people investing in cryptocurrencies are fools. I really don't think so. I think that what Buffett has here is, he always states that, well, he really wants to stay in his area of expertise. And he has stated over and over again that he definitely doesn't have any expertise in tech. And I think this is the major missing part here. I think what he's missing here is not so much looking at the money side of it or the currency side of it, where I think he's definitely an expert, or the investing side of it. I think what he's really missing here is some of the demographics that is happening at the moment. It's that millennials are way more interested in owning stuff digitally, that this virtual digital world is on a huge uprise. I think Buffett is really missing out on that here. Just like he has been missing out on the tech stocks. And I get it why. It's because he says he can't predict or he can't pinpoint to one thing. This is one thing that he's definitely right in. It's impossible to say that Bitcoin is a guaranteed winner. And he likes to have very high probabilities on his bets. So he always says, make few bets and have those bets be very, very, very high. He always explains this with betting, right? If you're betting at the baseball stand, You don't want to swing, you want to swing very few times, but when you swing, you want to be sure that you're hitting the ball. And so he says if he is betting basically on this, it's very difficult for him to be sure if he's hitting the ball or not. And I do think that this has to do with his expertise not being in tech. And so that is why I personally believe that he has a bit of a different notion on this entire term. So I agree with him that it's difficult to say, hey, this is a high probability bet. I actually don't think it's a high probability bet. I think Bitcoin to survive is probably like a 10% chance, right, long term over the next 10 years. But obviously the potential upside is humongous. And I think just kind of working through the math, it's really, really interesting. And that is why I am kind of interested. If you watch the video based on potential that I kind of brought out last, you will see me talking about this. But then still the odds are obviously kind of stacked against it because there's so many different possibilities. And so I get where he's coming from. I do think though there's one interesting aspect, and that's the last clip that we're going to watch from him, where he talks about store of value.
People, they like to speculate. They like to gamble. And if you can get something, particularly if you have something half plausible going on. If you had bought gold in 1942 and you say, we might lose the war and we might have to run off to some other country and, so let's put our assets in gold, you would have less than a penny for every dollar you got from owning stocks. Less than a penny. Now, if somebody calls that a store of value, I mean, I think they're delusionary.
Okay.
So here he compares gold and what a bad store of value it would have actually been. And obviously the facts and the numbers are right. But to me, that's only one side of the coin. The other side of the coin is volatility. And gold tends to move very differently to some of the other assets. Also, crypto moves very differently to other assets. And this is really relevant when I look at the total portfolio. Yes, crypto crashed a lot over the last 1.5 years or so. But if I look at my entire portfolio of the assets that I own, it doesn't make so much difference if you have the percentages right. Now, obviously, also when crypto goes up, it shouldn't completely outweigh your portfolio if you have the percentages right. If it does, you're completely speculating on one asset. So I do think that this is an important fact because volatility kind of gives some peace and some calm to people. And that is, I think, really, really important. And so obviously, to kind of sum this up, and I'm going to look what you kind of commented on below, but to me, I think Buffett is wrong in calling cryptocurrencies a scam or calling them a Ponzi scheme, calling them rat poison. I think he's calling it rat poison for his own traditional finance world. I think that he does see the threat that this has, and he's obviously very heavily invested in traditional banking stock, in his entire empire. And I think that this is something he doesn't understand fully, and obviously he does see it as a potential threat. And even though I don't think he wants to do this intentionally, but every human being wants to protect what he or she has. And so if there's this new thing coming up that you can't really evaluate or estimate, you tend to be a bit biased against it. And so I don't blame that against him. And it also doesn't kind of make my opinion of him less or more, because I know where his strengths are and I learned so much from investing and from him. And I think you should do the same. Don't call one person just because one part of his opinion goes against what you believe, and don't call this person stupid or don't think this person is a bad person in whole, but kind of pick and learn from each person in the individual sectors. I think that's really, really relevant. And so in Bitcoin, to me, I'm very convinced that Buffett's going to be wrong on this in the long run, just like many other people believe the same thing about him. That doesn't mean that my ideas aren't very, very similar to how he kind of invests. I just try to get my expertise into those new kind of things. So let me know what you think about all this. Yeah, I hope you have commented before. Maybe you want to add something now. Would be always interesting to hear. Give me a thumbs up on the video and subscribe to the channel. Share this stuff. I think more people should see this. And I hope I see you at the next video. Yours truly, Julian.